BlackRock might be secretly positioning themselves in Zebec, and 99% of investors are completely ignoring. Welcome to Crypto Journal. Hit that like button if you value my content and want me to keep bringing you these deep dive videos. And don't forget to join the channel membership, where I'll be uploading exclusive content just for members. You'll see the join button right next to subscribe. Trust me, you don't want to miss what's coming. Now, what I'm about to share with you today could be one of the most undervalued opportunities in the RWA space. Stick around, because at the 15-minute mark, I'm going to reveal the exact connections that link Zebec Network to institutional players that will blow your mind. Let's set the stage. Real-world assets, or RWAs, are currently the hottest narrative in crypto, and for good reason. We're talking about a multi-trillion-dollar market, and I mean trillion with a T. In 2024 alone, we saw RWA tokenization explode from a niche concept to a full-blown institutional race. BlackRock, the world's largest asset manager with over $10 trillion under management, launched their tokenized money market fund, BUIDL, on Ethereum. But here's what most people miss. BlackRock didn't just dip their toes in the water. They dove in headfirst. They're actively building infrastructure, partnering with blockchain networks, and positioning themselves to dominate the tokenization of everything from treasury bonds to real estate. And this is where Zebec Network enters the picture. But before we get there, let me ask you something. What makes a blockchain attractive to institutional giants like BlackRock? 3 things. First, regulatory compliance capabilities. Second, efficient payment streaming infrastructure. And third, scalability without compromising security. Remember these 3 points, because they're going to be critical in understanding why Zebec could be BlackRock's shadow play. Now, I know what you're thinking. Why would BlackRock use some random network I've never heard of? Hold that thought. The answer is going to surprise you. Let me introduce you to Zebec Network, or ZBCN. Zebec isn't new to crypto. They've been building since 2021, but they've been flying completely under the radar while laying down some seriously impressive infrastructure. Here's what makes Zebec unique. Zebec pioneered continuous payment streaming in crypto. Instead of traditional lump sum transactions, Zebec enables money to flow second by second, minute by minute. Think about it like this. Instead of getting paid every 2 weeks, imagine your salary flowing into your wallet every single second you work. That's the power of Zebec's streaming technology. But it goes way beyond just payroll. Zebec launched their own Layer 1 blockchain, the Zebec chain. This isn't just another Ethereum clone. They built this specifically for real-time settlements, institutional-grade compliance, multi-chain interoperability, and low-cost, high-throughput transactions. Now here's where it gets interesting for RWAs. When you tokenize real-world assets like bonds, real estate, or commodities, you need infrastructure that can handle complex payment flows. Dividend distributions, interest payments, rental income. All of these need to flow seamlessly to token holders. Traditional blockchains process these as individual transactions. Expensive, slow, inefficient. Zebec processes them as streams. Continuous, automatic, and at a fraction of the cost. Drop a comment right now if you're starting to see the connection here. This is important. The native token of Zebec Network is ZBCN. It serves multiple purposes. Gas fees for transactions on Zebec chain. Governance rights for protocol decisions, staking for network security, and payment settlement token. Current market cap? Surprisingly low compared to the technology they've built. And that's exactly what caught my attention. Now let's talk about BlackRock's master plan. Larry Fink, BlackRock's CEO, has been incredibly vocal about tokenization. He's called it the next generation for markets and the next step in the democratization of investing. But what's BlackRock actually doing? In March 2024, BlackRock launched the USD Institutional Digital Liquidity Fund, ticker BUIDL. This is a tokenized money market fund that invests in cash, US Treasury bills, and repurchase agreements. Currently, BUIDL is primarily on Ethereum. But here's the critical detail everyone overlooks. BlackRock has explicitly stated they're blockchain agnostic. They're not married to Ethereum. They're looking for the best infrastructure for different use cases. Ethereum is great for certain things, but for continuous yield distribution to potentially millions of token holders, it's expensive and inefficient. Every dividend payment is a separate transaction. Every interest distribution requires gas fees. When you're managing billions in tokenized assets with thousands of holders, this becomes a massive operational cost. This is exactly the problem Zebec solves. Here's where things get really interesting. BlackRock doesn't always announce partnerships immediately. They often work with infrastructure providers behind the scenes, testing and integrating before any public announcement. We've seen this pattern with their Coinbase partnership, work together for months before announcement. Their securitized integration, quiet testing phase before BUIDL launch. Their Circle relationship, discussions happen long before going public. And I have evidence that suggests Zebec might be in that same quiet phase right now. Keep watching. Let me show you the breadcrumbs that led me down this rabbit hole. Connection number 1, the Solana link. Zebec originally built on Solana. Why does this matter? BlackRock has been quietly expanding on Solana. Their BUIDL fund recently expanded to multiple chains, and Solana was specifically mentioned as a chain of interest. Zebec has deep Solana roots and relationships within that ecosystem. They understand institutional needs from the Solana perspective. Connection number 2, regulatory compliance focus. In 2023 through 2024, Zebec underwent a major transformation, pivoting hard into regulatory compliance and institutional-grade infrastructure. They implemented KYC and AML compliance layers, institutional custody integrations, regulatory reporting tools, multi-signature treasury controls. This isn't the kind of infrastructure you build for retail users. This is institutional preparation. Connection number 3, payment rails. BlackRock has been vocal about the need for better payment rails in tokenized finance. They've specifically mentioned the inefficiency of current blockchain payment systems for yield distribution. Guess which protocol specializes exactly in this? Zebec. Connection number 4, the quiet period. Here's something I noticed. Zebec has been unusually quiet on marketing, but extremely active on development. Their GitHub shows consistent, serious development work. They're building like a project that has secured institutional interest, but can't talk about it publicly yet. This mirrors the pattern we saw with other protocols before major institutional partnerships were announced. Connection number 5, talent acquisition. Zebec has been hiring people with backgrounds from traditional finance institutions, regulatory compliance firms, and enterprise blockchain companies. You don't hire this kind of talent for a retail-focused DeFi protocol. You hire them when you're preparing for institutional partnerships. If you're still watching, comment ZBCN below. I want to know who's paying attention to this opportunity. Let me paint you the complete picture of why Zebec Network could be BlackRock's shadow play for RWS. Imagine BlackRock wants to expand their tokenized funds beyond just BUIDL. They want to tokenize corporate bond portfolios, real estate investment trusts, commodity baskets, and infrastructure debt. Each of these assets generates regular cash flows that need to be distributed to token holders. Instead of processing thousands or millions of individual transactions for each distribution, BlackRock could use Zebec's streaming infrastructure. Treasury bills, interest streams continuously to BUIDL holders. Corporate bonds, coupon payments stream automatically. REITs, rental income flows in real time to token holders. Commodities, staking rewards, or yields stream continuously. The cost savings would be enormous. The user experience would be revolutionary. If this partnership exists, why wouldn't they announce it? Several reasons. First, regulatory caution. Major institutions announce only after legal frameworks are solid. Second, competitive advantage. Why alert competitors to your infrastructure strategy? Third, integration timeline. Technology integration takes time before public rollout. And fourth, market timing. Announcements are made when they create maximum strategic impact. Remember when Circle was quietly building USDC infrastructure before major institutional adoption? The same pattern is happening here. Zebec is building infrastructure that institutional players need, but they're doing it quietly while everyone is focused on flashier projects. Let's talk numbers and realistic expectations. ZBCN currently trades at a market cap that's a fraction of comparable infrastructure projects. Without giving specific financial advice, let's look at comparables. Chainlink, Oracle infrastructure, multi-billion-dollar valuation. The graph, indexing infrastructure, billion-plus-dollar valuation. Rendering infrastructure, similar range. Zebec, with unique payment streaming infrastructure purpose-built for RWS, significantly undervalued if the institutional thesis plays out. If BlackRock or another major institution announces integration with Zebec Network, immediate market revaluation likely. Institutional capital inflows, expanded use cases across RWA sector. Network effect as other institutions follow. I'm not here to show you a moonshot. Let's talk about real risks. First, speculation risk. This connection might not exist. I could be reading tea leaves. Second, competition. Other protocols are building similar infrastructure. Third, regulatory risk. RWA tokenization faces regulatory uncertainty. Fourth, execution risk. Even with partnerships, projects can fail on execution. And fifth, market timing. Even great projects can underperform in bear markets. My take, the risk-reward setup is fascinating. If the institutional thesis is wrong, ZBCN is still a functional protocol with real technology. If it's right, the upside is substantial. This is a calculated speculation on infrastructure that institutional players will need as RWA tokenization scales. Let me bring this all together. BlackRock and other institutional giants are aggressively moving into RWA tokenization. They need infrastructure that can handle complex payment streams efficiently and cost-effectively at scale. Zebec Network has built exactly this infrastructure and has been positioning itself with institutional-grade compliance and capabilities. The patterns suggest Zebec could be in a quiet partnership phase similar to what we've seen with other protocols before major announcements. Key indicators that would confirm this thesis: announcements of institutional pilots or partnerships, expansion of BUIDL or similar funds to new chains, increased Zebec integration with RWA protocols, regulatory clarity that accelerates RWA adoption. Whether BlackRock specifically is involved or not, the broader thesis holds. RWA tokenization needs better payment infrastructure, and Zebec has built it. This is the type of opportunity where you're either early or you're watching from the sidelines when institutions announce. If you found value in this deep dive, smash that like button. Seriously, it helps the algorithm show this to more people who need to see it. Join the channel membership for exclusive content where I'll be tracking developments in Zebec and other under-the-radar opportunities. The join button is right there next to subscribe. And drop a comment telling me, do you think BlackRock is positioning in Zebec behind the scenes? Or am I connecting dots that don't exist? I read every comment. Subscribe if you haven't already, because I'll be following this story closely and you don't want to miss the updates. This is Crypto Journal, reminding you, the biggest opportunities in crypto aren't the ones everyone's talking about. They're the ones being built in silence. See you in the next one.